Hey, welcome to another weekly wealth walk. There's a special asset class I want to talk to you about today that I don't talk about much, probably often enough. I want to hit kind of a deep dive on it this afternoon on weekly wealth walk because I had a conversation I'm going to share with you more about that I think you'll find very interesting. Stay tuned. Hey, Jerry Fetta here, CEO of Philanthro Wealth, right? Helping good people build more wealth who make the world a better place. So I had a conversation with a guy this week that's a fund manager, right? Someone I've worked with for a number of years now. And it's with an asset class I've talked about before, right? And I want to do another deep dive just because I had this conversation. It's fresh in my mind. And part of what I like to do with my videos and my content is I want to give you access to my world, right? These weekly wealth walks. It's not just, content and gurus and this. It's like what actually goes on behind the scenes. Right? If you could be a fly on the wall in some of the conversations, right? And that's really what I want to hit this video today. So I talked with a friend of mine named Ben, and we were talking about something called life settlement investing. So I'm going to pull up my whiteboard just so we can use some visual and stuff. Life settlement investing. Now, before I get into this, a couple of things. I am not your financial advisor. So do not watch a YouTube video and then be like, Jerry said I should do blah, and then you do it, and then you're like, based on the 4-minute YouTube video that I followed, it didn't work, right? Like, do your research, reach out to professionals. If you need more guidance, coaching, and education, you can reach out to me and my team. Those are things we help you with, but you need to actually engage us for that, right? And then we can send you to the right sources, give you the training, hook you up with professionals that are good at all of this stuff, right? So that's the first thing. Hey, you want to see a magic trick? Get a copy of my book, Blueprint to Financial Freedom. I know it's in front of my chest and my face because I want you focusing on the book and not me for a moment before you go back to focusing on me and the content. Second thing, this is not an offer to invest. We're going to go over a concept. This is not an actual, like, here's your prospectus and whatnot, and now you can go invest. It's not that at all, right? And then third thing is, if you make a decision to invest with something, we have a couple of points you need to cover. It's called clothe your capital, right? That's the root origin of the word invest. You look at where did that word come from. It originally meant clothe your capital. Number one, just like with clothing your body, you clothe your money with clothing that you like, that you understand, that fits you, that fits your goals and purposes. Number 5 would be things that are life essentials. They're vital, right? They're things we need, okay? Number 6, they're not overpriced. Number 7, that you have control over, right? Those 7 points need to be in. You like the investment, you understand it, it fits you, it fits your goals and purposes. It's a life essential, it's vital, right? That gives you upside, like the future will be there for it, but also downside protection. Not going anywhere. It's not overpriced. Price and value are not the same thing, and you've got control over it either through direct possession or you've got regulation and management in place so that you can manage it. You can see it as an executive would, like with a business. Okay? Those need to be in regardless of the investment. So what is life settlement investing? Right? Life settlement investing looks like this. So you have a person, typically is older. They have their life insurance policy. Right? So we're going to call this an elder. Okay, they have a life insurance policy. And this life insurance policy, they've got a couple of options. Okay, they're typically older. So let's say they're 75 years old. Okay, they're going to live probably another 5 to 10 years based on normal ages for people in the United States, how long we live. Usually it's about 80, 85 years old, right? They have a life insurance policy that has cash value. Now, they did not get a properly designed, specially designed high early cash value dividend paying whole life insurance policy. Back when this person bought this 40 years ago, that was not mainstream. There wasn't content online that they could learn about these things. So they can do a couple of things. Let's say they have $30,000 in their policy and they're paying premiums on it every month. They can take a loan, they can borrow the $30,000 out, in which case they're going to increase their expenses because now they have loan interest and their policy becomes more cumbersome and more expensive for them to keep. They can surrender the policy. They can cancel it. They get their $30,000 out minus whatever fees there might be, or they can leave it. And if they leave it, like they're just going to keep paying. Like they won't really ever access that money. And so this person needs this 30,000. Let's say they have a medical expense, right? They have a diagnosis of something and they need help. They need the money for it, right? So if they take a loan, they take the 30,000 out, they still pay premiums. They still have the loan interest now that they have to pay. And that policy becomes more risky for them. If you're 75 years old, you're probably not rolling in dough if you're in a position where $30,000 is tight. Right? So that's kind of a risky financial move for someone at that age to take a loan against their policy. They can surrender it. If they surrender it, they're going to get only their 30,000 minus fees. So a life settlement investor looks like this. So you have another person here. This is your investor. And he would like to buy the policy. He has money. He's going to buy the policy. Right? And so in this transaction, he might give this guy, let's say 3 times his cash value. So this person here gets $90,000. Again, that's just an example. And then this guy here, he takes over the premiums. He becomes the owner. And he also becomes the beneficiary. Right? And what happens is when this person passes away, this elder individual, they pass away, this guy, he gets the death benefit. Right? And so the death benefit is something that we know with life insurance, the death benefit is guaranteed to pay out. Right? Obviously, in the investing world, we can't use that guarantee word as much, especially in a relation of buying and selling securities and stocks and bonds and investments. But we're just saying on a life insurance contract, if I buy life insurance on myself with my family as the beneficiary, that death benefit's guaranteed so long as I keep paying my premiums. Right? So this is cool because the investor in this case, number one, is helping someone. Okay, so over a 5 to 10 year period, the investor might double his money, right? He could make 100% total return, right? This guy here, he gets to triple his money. He went from 30 to 90, right? So he spent 90 to buy the policy. He's going to go from 90 to possibly 180. And I like to cover this first because sometimes when I share this with people, they're like, but that sounds like you're preying on people. Okay, who gets the better deal on this transaction? The guy who doubles or the guy who triples? The guy who triples. The person selling the policy is winning, right? You're helping them. And so there's a very social aspect to this. Not only that, but there's a big need for the money. You don't sell a life insurance policy for no reason. So they're probably being helped with medical or repairs or whatever it might be that is giving them a leg up in life. Okay, the investor is going to make their returns when the policy pays out. So when this elder passes away, the death benefit pays out to the investor. Next, I don't want to interrupt you too long. I just want to give you a free offer for my book, The Blueprint to Financial Freedom. If you go to jerryfetta.com/B2F promo, you can get the book now. I'm going to let you get back to the video. Right now, I really like this, and I was talking with my friend that does these today. I really like this because it's what's called a non-correlating asset. It does not have direct correlation with the economy, with the stock market. It doesn't have direct correlation with interest rates. Like it's based on really 2 factors, which is the solvency of the insurance company. Like, does that insurance company have the money to back up their death claims, right? That's something you can check and verify. And so that happens in an investment like this. That's part of the due diligence. You're looking at that. Does the insurance company have the ability to pay? Number 2, how long does the person live for? Right? If I'm on the hook to pay the premiums. So they do undergo a life expectancy test and they get, how many months they're going to live for. That's done by a doctor. It's certified with a physician's statement. And obviously that's not a guarantee. The risk there is they could live much longer. Right? Not the worst thing in the world. I'm not going to be mad that someone lived longer and spent more time with their family. That does mean that I'm paying premiums for longer if they live longer. So that can reduce some of my return net because it's increasing my cost on my premiums, right? But if you do a good job with life settlement investing, this is something that gives you a lot of prediction, right? It gives you a lot of prediction. You know how much you're going to get paid out when the death benefit comes. You know how much you're going to put in approximately. You know approximately when it's going to happen, right? And the risk is that if you go past that, there's what's called a premium call. A premium call, basically means, this person lived longer. We don't have that much set aside in premiums. We need to cover more premiums for another year or 2, right? So I wanted to share this because it's for accredited investors only. If you're an accredited investor, by income or net worth. This is something you could be aware of, looking at and checking out. This is a very cool way to invest, helping other people. It's with an asset class for me that I really know and I'm comfortable with because I've been in life insurance for so long. But B, it's something that is very scalable, and it's been typically only available at like the institutional levels. You'll see a lot, if you go research online, Bill Gates, Warren Buffett, hedge funds, private equity, they're in life settlements and have been for quite a while. The idea that the everyday person like me and you can get into it, that's newer, right? And so I think that that's cool too. Anytime an investment opens up that is usually off limits except for the wealthy, that always excites me when I'm able to jump into it as well. So I hope this gives you a little bit of information on life settlement investing. Again, this is not an offer to invest. This is not financial advice. You should not watch videos on YouTube about how to give haircuts and then give yourself one in the mirror and then complain about the guy who did the YouTube video. If you would like to learn more about investing, financial literacy training, getting connections with opportunities like this, you can reach out to my team. This is something we help with. Thanks for watching. Like, share, subscribe. I'll see you next time on Weekly Wealth Walk. Hey, this is Jerry Fetta here. I want to thank you for watching my video, watching my content. I hope you enjoyed it. If you would like to learn more about the blueprint to financial freedom and how you can achieve passive income that exceeds your savings, your expenses, your taxes, your generosity, and build wealth like the top 1%, I want to encourage you, grab a copy of my book, The Blueprint to Financial Freedom. You can go to jerryfetta.com/B2F promo, or you can click the link in the description of the video here. The copy is free. You cover your shipping. We'll send the book out to you, and we'll send you an email with a bunch of great bonus material also for free. Get the book, subscribe to the channel. I'll see you on my next content.